Um, yeah, so I've been in the private lending business quite some time and I've learned a fair bit about credit, but you are the expert that's written the book. So we'll throw some questions at you here.
And maybe
So
I interrupt you really quick, Trevor.
yeah,
Richard, would you mind even just maybe for anyone seeing this, just introduce yourself and a bit of your background and about the book, which I thought was
Sure.
kind of cool, the credit game.
Yeah, you bet. I'm glad someone thinks it's kind of cool. My wife and my kids don't,
I'm sure they
I'm
don't. They
glad
never
someone.
will.
As far as my history is mortgage financing.
Okay.
Did that as a broker for about 8 years. Uh, High volume, but then when the book came out, people saw me more as the credit guy, which was great because I had spent so many years looking at the stupid things that I developed a passion for credit and just education and trying to get the right information to Canadians who are trying to make the best decision possible for them. Yeah.
And I saw that you've been invited to do like a significant amount of media around this when I was looking at your website, like, CTV and lots of folks have had you on to talk about the content.
Yeah, right before COVID hit. And
Oh,
then it
yeah.
kind of just then no one really wanted to talk about credit for a couple of years because there's more important things to deal with. But yeah, it got some great media to begin with, and now it's just a great resource for anyone that still reads. I guess there's the audio version as well, but the
Yeah.
majority of the education that I do is on video, just on YouTube as well. So.
Okay, cool. Awesome. Thanks for that. And Trevor, yeah, go ahead and
yeah, and
feel
so
free to dig
so
in.
credit is so important for people to borrow money, which I think is every Canadian, and there is not a whole lot of resources out there for people to understand. And I've run across that in doing mortgage for the last 20 years myself. So I guess the first thing we'll hit you up with is what are the most common factors that negatively impact someone's credit score?
Yeah, one thing that surprises a lot of people is how many errors that are on the actual report itself. We kind of put trust in the system and hope or expect that what is being said about us behind our back is true. But unfortunately, it's very common to have someone else's information on your report, or there's fraud or just kind of glitches in the system, which create some errors and some headaches for people trying to qualify. So that's something where that's probably the biggest surprise is how often errors are on the credit report. Um, and then the next one with that is paying your bills on time. I hope your mom has taught you that and that you listen. Just because she taught you doesn't mean you listen, but hopefully that's pretty common sense. And unfortunately, it's probably the only thing that's common sense about credit from what I have found. Um, the one that confuses a lot of people is the balance versus the limit on credit cards. People assume because they have a $3,000 limit that they're free to spend up to that, and they definitely are. But behind the scenes, anytime you get caught with what the banks consider a high balance, your score can drastically plummet. So you could be looking at a 50, 60, 100 point drop just because you got maxed out or even if you paid it off at the end of the month, you got caught with it showing as high on your credit report, which then dramatically lowers your score.
So if someone has a $1,500 credit balance on a $2,000 credit card, it actually is going to put them in a much worse situation than say owing $8,000 on a $20,000 credit card.
You got it. It's
Interesting.
the loan to value that matters the most. Yeah.
Okay. And if I could ask a quick follow-up to what you said, because I hadn't realized about looking for errors. My assumption is that my credit is very good. I did have my wallet stolen
Yeah.
2 years ago, and I had to report that to Equifax and TransUnion. So there's like a significant like if I apply for credit card, like I have to go through an extra step because of this theft. Am I able to like somehow pull or review my credit report without being penalized for having pulled it? Like to
Yeah.
review if there's on there?
Yeah, great question. So, Equifax and TransUnion have been making some improvements on their free credit report availability. Back in the day, you have to mail it out and you could only do it once a year. Now they have online systems. Equifax now has changed it so you get the score and the report for free once a month. And there is no limit to how often you can request it. So if you wanted to request that regularly, anytime that you as the consumer are requesting your own credit report, there is actually no negative effect to the score, and the banks and lenders wouldn't be able to see that you're obsessing over your score, which is
Okay.
good for those people that like to obsess.
Yeah, well, that might be a fun exercise for me to do because I've never done it.
Mhm.
So I
Yeah.
appreciate that, that stuff.
And so
Thanks. Thanks, Trevor.
once they find those errors on their credit file, what's the next steps?
Well, there's a few options. You can do what most people do and not do anything about it. Eventually, they should fall off, but typically, depending on where you are in Canada, it's 6 to 7 years that you're waiting from the date of last activity or date of last payment that it will stick around. So not the best option, but it is something that can, depending on how long it's been that you've already been waiting, maybe waiting another few months for them to fall off could be an option. Um, the one that is challenging is to go and try and dispute it yourself. So both Equifax and TransUnion have dispute portals or ways for you to dispute the errors. You can call them, you can submit the dispute online. Depending on how tech savvy you are and how much patience you have, that is an option. And then the third option is someone like myself. If you've tried and failed, or you just aren't patient, maybe you need it done right away. That's essentially what I do all day, is dispute errors and fraud on consumers' behalf.
Awesome. Thank you.
So, what are some strategies that people can undertake to rebuild their creditor after they've had some issues?
Well, the first step, once again, would be getting the report. I find that most people that have been through some kind of credit issue, they're usually a little overwhelmed at the whole prospect of trying to get their score from wherever it is back to the 650, 700 range. So there's that fear. And a lot of times their credit is much better or can be fixed much faster than they assume. But because of that, not knowing and just the fear of the unknown keeps them at bay. And that's one of the big missions that I'm trying to help out with, is that the credit score that you currently have is just a snapshot in time, and it is something that can dramatically change in a short period of time. So getting the copy of the report, checking it over, and then once you have that, then trying to get more familiar with the different options. As you had mentioned in the beginning, it's difficult here in Canada because a lot of our financial information stems from the US, and the scoring system is different. The banking system is very different here in Canada. And so a lot of those tips and tricks may not work. But the paying, or the biggest, I guess, probably three that would be out there is: one, pay your bills on time. Two would be making sure the balances on your credit cards are always low. And when I say that, low would be in what I've researched, and what I preach is keeping it under half of the limit at all times. And then the third one would just be making sure that you have uh, credible sources of credit. And what I mean by that is make sure that the credit that you are obtaining looks good for the type of credit that you're looking to apply for. So for where we get into a lot of problems with people trying to rebuild is they don't know which products will rebuild or improve their score the best way. And there's a lot of companies out there that advertise different credit rebuilding products, or there's a lot of companies that will say don't worry, doesn't matter how bad your credit is, we'll approve you. Um, and that might be a good stepping stone, or it might be an option. But there's generally better ones, and you also have to be careful of what type of credit you go for, because that can look bad to potential lenders as well.
I've heard people use secured credit cards. Is that something you recommend if they've really been credit score's been really driven into the ground?
Yeah, secure credit cards build the score similarly to an unsecured, so it's a great option. Uh, the downside is that some of the secure credit cards maybe don't look as good in the eyes of, if we're looking for mortgage financing, if that's the main focus, then, the Capital One might be a great start, or the Home Trust, and that might be necessary, but you also want to get additional forms of, or not even forms, but eventually work towards major lenders again, just because the major banks know that Capital One will approve anyone, and so it doesn't
Okay.
essentially show as credible as a major bank.
So would that be, Richard, like obtaining like maybe like a personal line of credit at your lending institution, or like what kind of vehicles might someone be able to get into to rebuild their credit through like is a strong lending institution?
If you can get a line of credit, that would be
Hmm.
awesome. But I have found that lines of credit are one of the most difficult to get.
Okay.
And the reason why is because in the eyes of a bank, it's just as risky as a credit card, with
Okay.
half of the interest
Right.
being charged.
Right.
And so they typically reserve those only for people that have already reestablished their credit.
Okay.
Um, so the ones I would stay away from are like the payday loans or the non-major bank high interest loans. You look at it as I'm paying my bills on time or building my credit, but in the eyes of the banks and lenders, they would look at it as you can't afford your monthly responsibilities, and so you're going and you're dependent on these high interest loans, and that's typically something where major banks would shy away from, for someone that's trying to rebuild. The credit cards are really good, so even if they are secured to get started, that looks good, and is a great way to rebuild. If you need a vehicle, then a vehicle could be an option. But typically, when you're rebuilding, those interest rates are pretty high. So you can get up to 30% on a vehicle loan, which
Wow.
is
Hmm.
drastically higher than what I want to spend on a depreciating asset.
Yeah.
So that's something where it is possible, but may not be the cheapest solution. So credit cards are typically what I suggest, because as long as you're paying the balance off in full before the 20 or 25-day grace period that they give you, then there isn't any high interest being charged on that. So it's one of the cheapest ways to rebuild your credit properly.
Okay. Great answer. Thank you.
Yeah.
Yeah, that's just about covers, I think, of whatever I can think that a consumer is going to need to do to get their credit score back up so they qualify for bank financing.
Yeah, now you don't have to read my book.
What else do you have on the list of questions, Trevor?
I guess the last one is just because some people will ask us as of course, East Coast Private Lending, as a lender, how does private lending impact either negatively or positively their credit score? And then what can they do to transition once they have a private mortgage to get back to bank financing?
Yeah, one of the things that I found interesting when doing the research for the book in the first place, coming from the mortgage end, I I just assumed that mortgages were the most important thing to the credit score, because that's just kind of what I had been brainwashed to believe. And mortgages actually are one of the least effect to the score.
Hmm.
Obviously important to maintain, and you got to have a place to live, and I'm not saying they're not important, but as far as how it affects the score, it's one of the least effects to the score. And I found that interesting. So when it comes to private lenders, major banks legally have to report to both Equifax and TransUnion. But for years, they didn't affect the score at all. So even if you were paying your mortgage perfectly for 20, 30 years, that wouldn't improve your score at all. They've made some changes where it does now on different on the bank version of the credit report, but non-major banks don't have to report to Equifax, TransUnion, or either of them if they don't want to. So if it's a major bank, it will show up or should, unless there's an error. Um, if it's a non-major bank, even if it's what we would call, a B lender, which is kind of in between that private and major bank lending,
Yep.
I don't think I can't think of anyone that is in the B range or in between that shows up on the report, and private lenders don't show up at
Okay.
all either. So the
Interesting.
only time that a lender that's not a major bank would show up is if they filed for a foreclosure or some kind of judgment, which obviously would negatively affect the score. But as far as your every other kind of monthly payments, it's not showing up anyways. So
Okay. Richard, if I had we would have a lot of applications coming in for folks that maybe they're trying to purchase a place, maybe after a separation or having a hard time refinancing after, their credit scores drop. And we had one individual that was like hurt at work, for example, take some time off, ran up quite a bit of credit card debt and really killed the score as a result. If I had someone coming to us like a broker at maybe a 550, a 560 is a pretty typical score that we'll have someone coming to us for a credit repair. Um, and they're going to do the right things, as you said. Um, how long should it realistically take for them to get up to that 680 that a traditional lender will look at them to maybe refinance through an A lender?
yeah, this is a great question. And the one of the things that I like a big message that I push out is I really wish people would just forget about the score.
Okay.
Because the score is very misleading. One of the things that's problematic about obsessing about the score is that the one that the consumers have is not the ones that you're seeing or the banks are using. And
Oh,
so you have this kind of almost like fool's gold, this false, misleading score, and that three-digit number can be like triple digits away from each other. So you can have a consumer that thinks their score is 550, but on what you're seeing or what the banks or lenders or brokers are seeing can be 100 points higher.
okay.
And so it leads people to make the mistake thinking that their credit is much worse than what it should than what it really is. The other problem that is there is because people will say, well, I have a high score, so I can get approved for best rates and best terms. And that's one of the main differences of my message compared to pretty much anyone else that I've come across out there is because of my history of mortgage financing. The score is a great first impression, but it is definitely not the most important thing that an underwriter is looking for. So
Okay.
I've seen credit reports that have like 750, but the credit card's only been around for 3 months, and that's still going to fit into a B or a private lending
Okay.
situation. And people get really offended because it's like, well, I have this high score, but it's your credit's not established. And
Okay.
so to answer your question, typically the B lenders or major banks, they're looking for at least 12 months of no like late payments, preferably 2 years of good repayment history on at least a couple credit accounts. And so when we talk about timeframes, the score we can jump that quite quickly. That's not the issue. The challenge is that if their score is low because of a proposal or because of some kind of debt program or
Yeah.
late payments or a collection, then really it's not the score that's going to control that time frame. It's going to be how long has it been since that. and what have they done from there. So
Great
typically I
point.
just tell people if you're looking for a big jump or there's been some serious challenges in the past, you're looking at least 12 to 24 months.
And that's what's so cool about you having this background in the mortgage industry is as I'm listening to you talk, I'm picturing the five C's of credit, and that right, and that the credit score is like one
Yeah.
piece of that, and so they really are in the underwriting process going to be considering all those other aspects, right? The collateral and the capacity and these kinds of things. So that's a great point. Um, Given that you've been at this for a while now, how do you feel? Because I sometimes questioners are getting applications about financial literacy, within our population. To people's general understanding of what does this all really mean, and how can I impact it? Because um, I guess I don't have a lot of confidence that there's enough financial literacy out there that people really know how to impact themselves quickly or effectively.
I would
And I guess my
agree.
question is, just how do you feel on financial literacy? Yeah, like your experience. Yeah.
Yeah, I think anyone in the financial industry, whether it's insurance or, pick a pick a topic, I think anyone would say that there's not enough of it because of just unfortunately how much fear is revolving around any kind of financial topic. And the fact that it's kind of like there's the insider secrets, but they're not as communicated as well as they probably should be. I think with social media and financial professionals trying to get the message out there, I think it's better than what it used to be for sure. Back in the day, you used to have to trust your banker because there
Yes.
was no one else. It was, but now if you're trusting your banker, that's something where you definitely need to look at alternative sources because they're probably much younger than you and don't have much life experience and have probably only been on the job for a few months. So that's something
Yes.
that that you might want to get some alternative sources to back up what they're saying. But I think yeah, I would agree that definitely more needs to be there. My biggest challenge is I get a lot of American information, like I mentioned
Okay.
before, where people will hear someone on TikTok, but and they say, this is how it is, and that might be accurate in the States, but completely different here in Canada. So
Yeah.
um,
It's
that's
a
the big
great point.
challenge. Yeah.
I bought my first home. So I'm actually a pharmacist by trade, and I sold my pharmacy 3 years ago and found my way into. I didn't want to stay beyond a pharmacy; eventually my feet hurt. But my first job was in Maine,
Okay.
and when my wife and she's a teacher, and I was working for a large pharmacy chain, so we were doing okay.
Hmm.
And we went to buy our first home, my first year out of school. There was no established credit. And I think what we had to do, the bank sent us, and granted, this was 2004 in the United States. So when you think about the trajectory the mortgage business was on at that point, it wasn't completely healthy, right?
No.
And they said, go anywhere. So we went to Home Depot and started a Home Depot card. And
Yep.
as soon as we made our first payment, boom, like we were
Score jumped up. Yeah.
we were able to do it. Another thing that I guess, and having been a pharmacist and still, learning a lot about this industry, I'd be curious to know your thought on the current trend because um, what I've witnessed, which I believe we've all witnessed through the last several years of crazy high inflation. I know somebody that I said last year, a colleague of mine was making, what I always considered to be a decent living wage, had to go to a food bank. Um, how are we feeling about people's ability to catch up in this hyperinflated environment that we experienced in regard to damaging their credit because they're just trying to put food on the table?
Yeah, it's hard because we've been accustomed to a certain type of living, and then to have it change so drastically or be limited, we've relied on high interest credit to
Yeah.
facilitate. the difference there. And during COVID, it wasn't that bad because the government was paying everyone. But once those payments started, once, CERB and every, the funding was taken away, it left people still trying to maintain that lifestyle. And unfortunately, it can only last for so long, which is why we're going to see a lot more debt programs or people entering into debt programs having to learn the hard way
Yeah.
that something's going to have to give. So I think that people are generally work very hard to maintain it and to stay out of a debt program. I think it's something that Canadians will fight tooth and nail to stay away from, which I don't think is necessarily a bad thing, because they're trying to get everything working properly. But when they do fail, it is nice to know that that failure is really just a matter of them learning. Like it's just a learning experience, or can be if they do it right. And going through a debt program, you can rebuild quite quickly your credit, and then you just kind of start fresh again, which is a nice reset.
Okay.
So as much as I am a little scared about the future and kind of what could be there. The nice thing is that with the education that I have, I mean, worst case is a bankruptcy or proposal, but really, if you know how to rebuild credit properly, you can really get back at it within a couple of years, and then hopefully you've learned from that and you've made the adjustments that are needed, and then you can start kind of rebuilding again.
Okay. It's a great answer. And if folks from our region wanted to utilize your services, how would they go about doing it? Someone that's trying to avoid the consumer proposal or bankruptcy, I think I got enough wiggle room to do it. I need Richard guidance because, maybe I've just never been taught. How can people connect with you, Richard?
So as I mentioned, YouTube, if they're looking for information to get education, as much as my book is a resource, and if they
Yeah.
want to grab it, then by all means. The YouTube channel is chock full of videos that are easy to navigate and short little topics that I think are the most beneficial I can make them.
Okay.
But if they have direct questions, or have, well, something big on their credit report they need help with, or just challenges like that, then they can go over to creditgame.net, which is my website, reach out, or shoot me off an email, info@creditgame.net. Those are the best ways to get a hold of me.
Awesome. I assume people can subscribe to your YouTube channel.
Yep. Yeah, you bet.
Wonderful. And if someone wanted the book, creditgame.net, are they able to purchase the book there?
They can, or if they are looking for the audio version, that's on Amazon.